Hi, this lesson today is for my A-level accounting students. We have a question involving non-current assets, depreciation and disposal. We can see the question on the left-hand side of our screen, and on the right-hand side we've got all the detailed steps which I'll explain. With that being said, let's begin. The following information is available in respect of a trader's non-current assets. In the table, we are given the accumulated depreciation at 31 May 2020, the depreciation charge for the year ended 31 May 2021, and the accumulated depreciation at 31 May 2021. Now you can note that I have highlighted all the dates because these are very important to get the question correct. During the year ended 31 May 2021, a non-current asset which had cost $10,000 was sold. There was a loss in disposal of $1,200. What were the sale proceeds? In other words, find out how much this asset was sold for. Now, we understand that the carrying amount at any given point in time, or in this case, the carrying amount during disposal, is simply the difference between the original cost and the total or accumulated depreciation. Now in the table, we are given the accumulated depreciation closing balances at 31 May 2020 and also at 31 May 2021, right? Therefore, the balance which is given at 31 May 2020 can become the opening balance in the new financial year starting 1 June 2020, right? So the correct way to solve this question, or the best way to solve this question, would be to prepare the ledger account for accumulated depreciation. So accumulated depreciation is what we refer to as a contra asset account, which means this account is a separate account which is prepared to record all the relevant reduction for those specific non-current assets, and those non-current assets, as we utilize them in our business, they lose value, which is what we refer to as depreciation expense. So the collective amounts for all this depreciation expense since the time these assets would have been purchased are recorded together in a separate account, which is this accumulated depreciation account, a contra asset account, which means it is in contrary to the regular asset at cost account. Okay, so assets by default always have an opening balance on the debit side. Therefore, a contra asset account must always have an opening balance on the credit side. So we can see that on the 1st of June 2020, on the credit side of the ledger account, we are including the opening balance, which is balance brought down, B/D, of $40,000. And then at the end of the financial year, which is at 31 May 2021, we are including the closing balance, which is balance carried down, balance C/D, of $46,000. Okay? Now, based on the statement that is given under the table, we know that we sold this asset, right? And when we sold this asset, we made a loss of $1,200. What we have to do now is find the total or accumulated depreciation for this asset which we had sold. And the purpose of preparing this ledger account is to find that amount. Now in the table, we can see that the depreciation expense for the year ended 31 May 2021, which is the most recent financial year that has ended in this question, and that is $9,000. How do we journalize every time depreciation expense is incurred? We debit the depreciation expense account because by default all expenses incurred are debited. We debit the depreciation expense account by $9,000 and we credit the accumulated depreciation account by $9,000, which validates the discussion that we had before regarding the collective amounts for depreciation since the date was purchased that is gathered and stored in the accumulated depreciation account. So based on this journal entry, we understand that the accumulated depreciation account is credited, which means on the credit side of the accumulated depreciation ledger account for the year ending 31 May 2021, we are recording $9,000, and the cross-reference in this case, we have written income statement, obviously because the depreciation expense which we incurred of $9,000 is the amount to be shown in the income statement under the expenses section, right? Now, to find the total depreciation for the asset which we had sold, we need to balance this. So we first find the total of everything on the heavier side, which is the credit side, and that is $40,000 added with $9,000, giving us a total of $49,000, which must be the total of everything on the debit side. And once we subtract the closing balance of $46,000 at 31 May 2021, we are left with $3,000, which has to be the balance for the asset that we had sold. And that is why we had included the disposal of asset as the relevant cross-reference, mainly because the question clearly mentions that an asset had been sold. Okay, so the asset that had been disposed had a total or accumulated depreciation of $3,000. So on that basis now, we could find the carrying amount during disposal, which is the cost of $10,000 minus this accumulated depreciation of $3,000, therefore giving us $7,000 in the carrying amount during disposal. And we know that the business made a loss on this sale of $1,200. So if the economic benefits available for utilization from this asset, which is the carrying amount, was $7,000, then shouldn't that mean that this asset was sold for $5,800, which justifies the loss that the business has made, right? So therefore, on this case, the correct answer to select is option A.